Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Tuesday, September 17th, 2024.
But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already. Subscribe to the Wicked Stocks YouTube channel. Share the content, if you would, with friends and colleagues. And check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever.
Let's take a look at the charts. I'm going to start with the day itself and then work our way out. We've got this channel structure we've been holding for the last better part of a week. It held the upside gains last week, these marginally higher highs Wednesday, Thursday, Friday of last week. 236.88 is that ceiling now. It actually correlates well, of course, with the 237 even 5/8 Fibonacci, and that is a 5/8 Fibonacci from the July high against the August low. So if tested today, can contain daily buying pressures, and if settled above 236.88, would set off a 3 to 5 day buy signal to 251.23, where we could top out through next week, possibly the balance of September activity, and fall away from there to the trend line here that would be a channel bottom then. So if we test the channel top at 251.23, we have a new channel bottom really that is now, I'm going to say, in the 220s, low 220s, if not in the low 220s, upper 210s and climbing. So you could say testing the low 250s, expecting the low 220s rather within 2 to 3 weeks. Let me continue with the upside. Does this show? Okay, yes, this is the upside for today. 230.29. The high settlement price so far, following the August low, actually, and that was put out last Friday. Yesterday, that is Monday's high, was 229.96. So pushing through 230.29 is kind of an intraday double buy signal, if you will, above yesterday's high, above, of course, the high settlement price from last Friday. That does allow then 236.88 on an intraday basis, where if you go long above 230.29, take profits at 236.88. You could consider going short at 236.88. I like it today, especially because of its convergence right now with that 5/8 Fibonacci. So I expect the market would have trouble here today for the balance of the day, and could even back away within a day or two to channel support that is presently 226.90. Now we're very close to this 226.90 channel bottom. We settled roughly 226.74. In fact, an unchanged open on Tuesday would be just below 226.90. So we are right at a pivot point here on Tuesday. And if we do open at or above 226.90, this market can recover nicely. And I say recover, it's not as if it's sold off significantly over the last day or two, but it can push on to new highs, 236.88, new post-August low highs within a day or two. Once again, I'll take you to the 230.29 upward pivot point for the day that we could see 236.88 today. Now for the downside, if we do happen to break 226.90, 218.34 in reach, and you can see that as an intraday support level only. And if we close below this 1 week channel bottom at 226.90, I do see the 210.60 formation as in reach by Friday's close. I would anticipate a slight increase in volatility. This could be a 2 to 3 day sell-off. By Friday's close, we could test 210.60. 210.60, if you've been watching this series for the last week or two, you know is the beginning of a band of support all the way down to 200.49 that may well contain selling not only through next week, but well into October trade From here, we can round back up to what is channel resistance, presently in the 250s. And in fact, we've got 251.23, as I've already shown. And I've been saying this now for a few weeks, that if you're a 2 to 3 week swing trader, you're selling 251.23 or you're buying a 200.49. Now, you may elect to also buy 210.60 prior to that. It's kind of a tough, I like to call it a band of support. In other words, if we were to close below 210.60 by one measure, that would be a sell signal. But I'm not convinced of longer-term bearish continuation unless we were to close below 200.49. But back to my broader point, as we move into October trade, you're buying the low 200s, 200.49, and you're selling the lower 250s, 251.23 here. Now, if we close above 251.23 over the next few weeks, we actually have a meaningful buy signal through October and probably into November, anticipating then 299.20, a rising channel top. Within, I'm saying, 3 to 5 weeks, could take the better part of 2 months, closing above 251.23. If you're not long Tesla already, that would be your indication to do so. Really, through the rest of the year, just about the following 2 months, then likely to reach that 299.20 area. And inversely, if over the coming a week, 2 or 3, we were to close below 200.49, just the opposite. That 200.49 would be a downward pivot point for the following 1 to 2 months, then anticipating the 156.45 descending channel bottom. Those are your big picture trades that we're not close to making either of them right now. Right now, it really is kind of the 2 to 3 day dynamic is two-sided. Buying 226.90, selling 236.88. If we close above 236.88, 3 to 5 day swing traders go long up to 251.23, where 3 to 5 day swing traders can take profits and go short. Also go short 2 to 3 week swing traders, as this market could then fall back into the 220s over the following 2 to 3 weeks. Inversely, if we were to break 226.90 today, 218.34 likely, but closing below 226.90 is a get short strategy for 3 to 5 day swing traders, anticipating 210.60, where profits can be taken for 3 to 5 day swing traders. And 3 to 5 day swing traders can consider going long, or you might wait it out for 200.49. That's kind of a tough one. 200.49 is your aggressive downward pivot point into later year, and it is also a base of support that really begins at 210.60, where a long entry can be made over the 2 to 3 week time frame, anticipating then upward rotation up to some variation of this 251.23 channel top. Is there anything else to say? I'm going to say one more thing. If you want TLT analysis, I put out a video today that you can see for free. All you have to do is go to wickedstocks.com and sign up for our insider. Halfway down the homepage, give us your email address, and you'll get some good stuff that we're putting out pretty much on a weekly basis. So the TLT is the 20-year Treasury bond ETF. It had a meaningful buy signal in early July. It is now approaching our target. This is an interest rate market, of course, inversely related to interest rates themselves. So I'll have you take a look at that. You can see it all for free by signing up for our insider. Now, of course, you're going to get a little bit of marketing material with that during the week, but we will not inundate your inbox with Wicked Stocks marketing. You might get a couple a week, something like that, but you'll also be getting some really good stuff that we're putting out for free on a continuous basis that you will not see on YouTube. I'm going to leave it at that. Please click like, share, subscribe, check out wickedstocks.com, take advantage of our 5-day free trial. I will be back tomorrow, of course, with Wednesday's Tesla report. You have a great day.